Do I chase this rally?
Selectively, yeah.
Okay.
I do think the index has more to go up. Both the CSI 300, MSCI China is just below our bearish target. The next thing people will watch, one, earnings, and then two, the twin sessions coming in the first week of March. Any sort of policy signs that people can take away from. I do think in the past 2 quarters, you saw the free cash flow for Asia-listed non-financial companies growing much faster than the CapEx. So the free cash flow. The X growth, but cash flow improvement that is commensurate with the value profile is coming together. Yeah.
Who's buying this rally, you think? I mean, if it's still, you're not seeing the real money, long-term investors come back, is that going to be something that can markets still stabilize without those long-term investors?
That's a key question. We took a lot of time to look into the flows. Lunar New Year, we saw $392 billion into 730 ETFs, but then 94% of that went into the bigger cap indices, so CSI 300, A50, 500, 1000, and Chinex, right? And then after that, the post Lunar New Year flow, 12 billion broadened out to a little bit more to the smaller caps. And smaller caps, I think on February 5th, you also saw some flows. Now, most interesting is when we look at the EPFR data, the outflow out of China since 3Q23, that was pretty big. It was 18 billion for funds that domiciled offshore, right? But that has moderated. So around that outflow, we saw 11 billion inflows into Japan and 4 billion into India. But since December, there are 4 weeks where we see net inflows into China. So I think there's been an outflow, but it's not moderating. So among the investors we speak to, the EM value people are most interested because they see on a single stock basis, some proxies are becoming quite reasonable in the global EM context.